So let's now look at how these recurring general journals work by making a few examples. And I already opened the page, and you can of course very easily use a search function to search for the recurring general journals. And this will bring you to this page. Now before entering lines, I will make a small change to the batches. So I will open the list of batches. And what I will do is clear the copy text or vet setup to journal lines field, because I don't want the posting groups of the GL account to be copied to the journal lines. So there we go. Okay, now the first example. So a recurring general journal is just like an ordinary general journal, but with a few additional fields, as you could read in the previous section. And the first one, very important, is the recurring methods. Now, there's an explanation on each of these methods in the previous section, and I will start with a very simple example, fixed. And remember, fixed means that the amounts are fixed and that they will stay on the journal line also after posting. Then there is the frequency. So with the frequency, you define when the journal should be posted. And in this case, I would like to make an example where the line posts at the end of each month. So I will enter a formula 1M, and then I will add CM, which stands for current month. And this will always bring me to the last day of the month. Then the posting date. Now remember, the posting date should be equal or sooner than the work date, because otherwise the line is not processed. Now my work date is April 12, 21. So this means that I will use a posting date of March 31st, which is before the work date. Then I will enter a document number, and if you want, you can use some variables like this, for example, %3. And next I will prepare some simple journal lines. So in this case, let's post rent expenses. And I will do that for an amount of 1,000. And if you want, that's of course not mandatory, you can add an expiration date. So for example, I would like to post these lines until the end of the year. Okay, then the second line, which is my balancing line. So this is of course also a line with the same recurring method. I will use the same recurring frequency, of course the same posting date, and my balancing account for this example is 10,500 prepaid rent, for which I will enter a negative amount of -1,000 and with the same expiration dates. Okay, so there you go. This is my first example. These are my first recurring general journal lines. Now let's go ahead and post this. So I will click here on post print and I will select post. And there we go. Now everything is posted, as you can see here. And now here on my page, so on the recurring general journals page, almost nothing has changed. So you can still see two lines with the same GL accounts, with the same amounts. The only thing that has changed is the posting date. And so basically when posting, what the program did is applied the recurring frequency, so the date formula, to the previous posting date, which means that now my journal lines are ready to be posted on the end of April. Now if I try to post, you will see that this will not work. So if I try to post again, the system will say there's nothing to post. And this is because now the posting date is later than the work date. Remember the rule with the posting date. Now I have used recurring method fixed, and as a result you can see that the amounts will stay on the line, which means that we expect next month to post the same rent expense. Okay. So that's the first example. Let's make a second one, and I will do basically almost the same, but instead of using fixed, I will use reversing fixed. Now suppose that this is an accrual, and as you might know, accruals should be reversed in the next period. And for these type of entries or transactions, you can use the reversing methods. So notice that there's fixed, variable, and balance, but that we also have these methods with the reversing function. And reversing means that the system will automatically post reversing entries in the next period. Okay, let me show you an example. So I will use the same date formula, because also this is something I would like to post each month. I will enter March. And then there's the reverse date calculation field. Now, with the reverse date calculation field, you can enter a date formula that you want to apply to the posting date for the reversing entries. So my initial entries will be posted on March 31st. Now suppose that I would like to post my reversing entries 1 day later. I could enter 1 day. And this means now that my reversing entries will be posted on April 1st. If you want to post them 5 days later, you can of course enter 5 days. But you could also enter, for example, the same formula, so 1m plus current month. So, and this will now guarantee that the reversing entries are posted on the last day of the next month, you see? So, and that's what basically happens in most cases. These type of entries are typically posted at the end of a month or a fiscal period. Now, suppose that the rent expense is for 2 months and you only want to reverse it 2 months later. You can, of course, also enter 2m plus current month, and so on. So I will stick to the 1 month example, but here you see that we have quite some flexibility with these date formulas to specify the reversal dates. Okay, so let's enter the same amount, the same GL account, so the rent expense. And in this case, let's take 2000. And then I will go to the second line or to the next line, and I will of course use the same date formula and also the same reversing date calculation formula. Then my balancing account is again the prepaid rent, and for a credit amount of 2000. Okay, so quite similar to the first example, but the difference is the method and then the reverse date calculation. And there will also be a difference in the result. So let's go ahead and look. So first I will post. So everything is posted, and now to check the result, I will search for the GL registers. And here the first line is the result of my last transaction. So let me click on Process and then General Ledger. So here you can now see that there are 4 entries. So let's sort them on posting date. So the first 2 are posted with date the 31st of March. So this is my initial entry where we posted a debit to the expense account and a credit to the prepaid rent account. And then you will see that 1 month later, so based on the date formula for the reversal entries, I have the reversing entries. So in this case, a credit for the expense account and a debit for the prepaid rent account. So that's the result of using a reversing method in combination with the date formula in the reversing date calculation. So these are a couple examples of how we can use the recurring general journal. In the next unit, I will show some more examples of how to use the allocation function in the recurring general journals.